Wednesday, July 9th, market analysis. Stan Ehrlich, good morning. Almost 10 o'clock California time. We start out with indexes, go to futures and some stocks, sometimes other topics. We have overbought conditions in the last week or two for stock market indexes. They are starting to roll over, in my opinion, and starting a move down. We are in some cases out of the overbought condition. And a little rally today, not doing particularly well. Started out on a stronger note, came all the way down to, in some cases, lower than yesterday's close, and bounced back a little bit. Here's the bounce back for the E-mini. Not that particularly aggressive. The rally failed. Basically stopped almost exactly at the high of a couple of days ago. Well, the late afternoon or regular session highs. Going back, I fully expect that the low of Monday is going to be broken and closed below and start a move down to at least 61.07 on the E-mini, and the next support area would be 59.52 or lower. And by the way, I want to remind you, I'm going to start these recordings starting on Monday, the 14th of July, a little bit after the 1 o'clock California time to close, traditional hours, instead of at this time, so that I can get all of the daily data, commentary involved, and finalized signals. I have other obligations I'm going to be needing to do during the trading time frame in the mornings. And I also put that in writing starting yesterday. So this coming Monday, these recordings will not be available until, probably at the latest 2 o'clock California time. I know that's 5 o'clock East Coast time. Sorry. So I am expecting the lows of the last few days to be broken on a closing basis and a fairly nice dip lasting maybe a week or two, starting very soon. And again, the 1 minute on the E-mini. What about the SPY? Other than the different trading hours, we do have the possibility of an upside exhaustion gap at the end of last week. So far, no new high for the move up, no engulfing. We do have one on the YM, by the way, this morning. Another one. And the SPY looks like it's losing its upside momentum and probably will close below Monday's lows, I think, before the end of the week. First support area starting at 613 down to about 609. Then there's a gap to close. The gap was created on June 24th. Then we got a little support, and then more at the various levels on the way down. I'll extend these support level markings to the right as needed. The ones that are relatively close, I'm doing right now, of course. And the other ones if we get closer and closer. So, rally failed to make new highs after opening on a firm, not that big a deal. Let's note, up a point or something. And right now, we're up 1.5 points, a little below where the opening is. Nothing particularly super strong about this, just a little bit higher on the day. What about the QQQ? Well, you know that we're well into new historic highs. And so far, the QQQ is acting fairly bullish, to be honest with you. Got overbought when it went into new historic highs. When it came down to the old highs, it didn't even come down all the way. Turned around, made new highs again, and again this morning, very slightly. But we are in a position where if you get below yesterday's lows, like the YM has already done, you're going to end up with a lot of bearish engulfing ER red sell signals that frequently provide major turning point indicators. Now, that red one didn't work, obviously, and this one didn't work very well a couple of days. But this buy signal was a whopper. You shouldn't be ignoring these. That sell signal worked for several days very substantially. I don't need to go and find great examples for you. You've seen a lot of them. So watch out. If we get below yesterday's lows on these indexes, you will have a lot of bearish engulfing ER sell signals. And that would turn me bearish, period. It hasn't happened yet. We're holding. Next. Yeah, you can see it bounce back fairly well so far. Next, we have a new historical high by Squeak on the NQ. Almost a bearish engulfing, which would have turned it red, and it will turn it red if we get below yesterday's lows, which will almost probably get below Monday's lows, which will then all of a sudden be below the lows of the last 4 previous days. A pretty significant bearish engulfing, and it will be red. Next, this is the spike rally, some kind of rumor, conversation, whatever, and didn't hold. So this bounce back is starting to fail a bit. We'll see what's going to happen here. We do have an official red ER sell signal on the YM Monday. Dribbled off a little bit more on Tuesday. Today, we got higher than yesterday's high and lower than yesterday's low. And at the moment that it was higher on the lower on the day, it was red. Now, this is dynamic. So if we get up and we're up 57, 58 at the moment, ticks, 61, 60, it won't be red because you have an outside up. You need an outside current tick lower than the previous day's close down day in order for it to be red and therefore a major sell signal. And so far, it's only been a couple of days, and we really haven't gone down much. The Monday sell signal still stands. Still good. It's those signals like that one back on January 31st that people, if they ignore them, are making a big mistake. Now, if you do pay attention to these things, the worst case scenario is a stop just above the high of the red bearish engulfing price candlestick. But my automatic code lowers my stop sometimes every single minute or very, very frequently, like once an hour, once every. It depends upon how quickly the market moves in my favor. If it goes in the wrong direction, my stop is already in place. I know what my risk is, and I'm out if I get hit. You're not going to be right 100% of the time, guaranteed. And you need protection, protective stops. Stop loss orders are typically what they're called historically. I like to use the phrase protective stop. So, a close today below yesterday's close would give me another red bearish engulfing ER sell signal, 2 of them in a 3-day period, which is not that common. Let's keep going. Here is the current new short in progress with a small loss. We sold close to the bottom of the break when it got lower than previous day's close. We had already been lower than yesterday. Then we rallied above yesterday on that pop-up rally. Then we started to get below yesterday's settlement. That turned it red, got the automated system short, and our protective stop at the moment is way up here, unfortunately. I could go into the code, inputs rather, and change it to make it come down, down, down. Frankly, I'm a little concerned. I would probably consider putting it at 44,633-ish above that rally high. And if I had to, I might even re-enter the short if it started to create a bearish engulfing red again. Otherwise, we're short. It's as automated. You sit back and you watch and see what happened. The trade, identical situation, identical code. 2 days ago on Monday, got short right there and had a great scalp all the way down to there before it got stopped out. There's our yellow dotted trailing stop. Worked great. This doesn't have a decline yet because we haven't started to make lower lows or gotten as close as we need to get to the close. That could cause the trailing stop to go down, down, down also. Next. Russell, major historical support area, still causing problems, which is fine. I expected it. I think it's stopping the rally. I do expect new lows lower than last Monday, 2 days ago, very soon. Next, nice strong rally momentarily. Next, bonds. Well, we're getting our bounce. No signals, no oversold. It did get overbought on the high day, as it turns out, closing at the top of the resistance area for the second day in a row. And kaboom, boom, sideways, boom, boom. And now a little bit of a bounce. Now, intermediate to long term, I'm still very bullish. Intermediate meaning next few weeks, long term meaning months from now. Several. Short term would be the next week or two, and there's a possibility it could dribble down a bit more before it starts to turn up. 10-year notes, basically the same thing. No signals, no oversold, no overbought at the moment. It's just getting a little bit stuck below the resistance level, and it may be turning up. I just don't have any particular signals or any great reason to tell you that is a low day yesterday. And we're going to go to crude oil. Trying to make new high for the move up again. Got a fantastic sell signal that did great for a day. Big move down, tested support. Did not quite get oversold, but we're working our way back up some. Now, I still think it's going to come down to this major support area again and maybe not hold. So I'm basically looking for sell signals at this point and trying to tell you this rally is ending and it's going to start moving lower, in my opinion. No guarantees. The low in natural gas is another substantial new low for the trend down. You know that I've been watching this complex head and shoulder top for months. It is working just fine. We have the original downside breakout on a close below the neckline, June 25. A little bit of a downside follow-through. The only minor problem we had was one close above the neckline, which should never happen, but it was resolved immediately the next day in fine fashion with a big drop. Since then, new lows, a little bounce, new lows, a little bounce, and today, for the first time, we are getting oversold. So I do expect another little bounce, and we're sitting here at the bottom of support. If we close below support, it could fall apart for another day or two before it bounces. But I'm bearish. I'm looking for a move down all the way down to 115, almost 1. Very bearish. Next, we've got a basic outside down day, bearish engulfing candlestick, but because we're not overbought, we don't have it red. But this does imply to me, with a bearish engulfing candlestick, that we're going to start working its way lower. So I'm looking for a turn here. I think this is turning down today. Next, we've got a little bit of a dip. Gold up slightly momentarily. We're between a rock and a hard spot. Support level, support level holding recently, June 30th. Minor bounce, nothing particular important about it, but it was a bearish engulfing. And yesterday we had another bearish engulfing, and today we have a lower low. Now, again, at the moment, it's just a little higher. Well, I don't know if it's going to close that way or not. But until we have a downside breakout or an upside breakout, and the longer-term trend is up, but look, it's losing momentum. It's going flat for a couple of 3 months. So I think it's rolling over. Well, how about silver? Pretty much the same story, not as much time involved, but good support, or modest, I should say, support a little lower. Excuse me. Some resistance on the upside, and we're getting a little bit stuck here, very similar to gold. And what about platinum? Well, trend is up. Higher high, higher low. Current tick slightly lower. No big deal. I got to be neutral at the moment on platinum with a tinge toward bullish because it held support. A bearish engulfing sell signal did not work. We made new highs, got periodically overbought, didn't quit. Lows are creeping upwards. Highs are coming up in general. Got to continue to be bullish We're looking for a move up to 1456.20 or higher. Copper is different. Where am I going with this? Oh, boy, I didn't realize I was all the way over there. Good. All right. So, wait a minute. Come on. There we go. Copper did have an explosive move up yesterday, and it closed way above its previous resistance level. Plus, it came down basically to the support and is holding. This looks pretty good for copper. This is exactly what I was mentioning yesterday. If you closed above the old high back on March 26th, then that becomes support, and it bounced off of it basically so far today. I don't know. Copper looks really, really bullish here for some reason. I don't know. I'm not a funny mentalist, but it could continue to go way, way up. Not sure why. When you find out, good for you. Next. That wasn't a good move. Oh, that should have been there. Okay, good. So, possible bottom formation in soybeans, but support failed. Now I think we're going to come down a bit more to 10.03 and very possibly down to 9.95. If that fails, then we're going to come down to 9.74.5. This is still building a long-term bottom of some sort. I'm disappointed that it didn't turn around and start to rally right back up again. This does kill the potential longer-term effect on the bullish engulfing buy signal, ER buy signal, but it did work for 1, 2, 3, 4 days, and there was a pretty darn good rally afterwards. But ultimately, it didn't cause a really big move. Many of these do. So I'm slightly bearish in soybeans for a little while now, as it tests support areas a bit lower. What about soybean oil? It broke out of a head and shoulder bottom with a classic bullish breakout on June 16. Got overbought, had a bearish engulfing, which stopped the rally, dropped off for 2, 3, 4 days nicely, held above the neckline, started to make new highs, got overbought a little bit last Friday, and is pulling back slightly. I think soybean oil stands a good chance of holding above 51.5, maybe quite a bit above that, 52, maybe above 53, where it's sitting slightly at the moment, 53.40, and starting to make new highs. That would be exactly what this bottom formation should be doing, and only taking a few days to do it. Sooner the better. If it does start to close below 51.5, that's going to cause a big problem. We'll see what develops. Soybean meal. New lows again. Oversold for 3 days in a row now. Bullish engulfings did not work. We could have another bullish engulfing at any moment, but this looks very heavy. I'm not sure how much further down this can go, but it looks very bearish. We probably should bounce out of this oversold condition. Let's see if it can get above 281 and close above 281. Then we stand a good chance of coming up to approximately 294. What about corn? Lower low again. No significant rally. Corn looks like it could get oversold soon. I don't see a turn yet. Nothing tells me it's about to rally. Now, there is a gap to close. You need to get up to 417 someday. So you got to keep an eye on that. And I'll put a gap marker in there so we can see what I'm talking about in the days to come. There we go. So we're holding so far in wheat, but I don't know. I just don't see the strength here. I'm afraid that it's going to start closing below 534.5, and that's probably going to cause it to make a new low to the whole trend, like corn. So really only soybeans and soybean oil have anything really great to talk about on the long side. All the other grains look to be neutral to bearish. Shell closed the gap finally. Took a couple days, that's all. So that's done. fine. Let's pull this over to show only the time frame for the gap. That's good. And the trend is up since a whopping bullish engulfing on the very bottom at April 9th. And it obviously has been a whopper. Now, what about the sell signal that we got so far? It is the high of the move on June 23rd. So we don't want to see it get above 72.40. I probably would. That's the most rally that I would want to allow for. This is already a bit more than I was expecting, except it closed the gap, and I'm not surprised about that. And now I think it's ready to turn right back down again, make it below 69.19 on a close, and come all the way back down to, I suppose 67, 66, and maybe even lower. Next, bearish engulfing on the high day so far on Apple. I've mentioned as Apple goes, the market goes. So we're getting bearish on Apple because of the bearish engulfing. We slipped a minor amount yesterday. Today we're dropping off to new lows again. And it looks like it could close below yesterday's low, a new low, and it'll close below all previous lows since Monday's bearish engulfing. This bearish engulfing so far is doing exactly what I would expect. Maybe a little slower than I'd like, but it's still doing it, and it's doing it just fine. I am looking for a move down to about 198, and probably 193.5. If that gives way, then we're going to come down to 170. Next, I still think this gap could be closed in Tesla. Not doing much of anything today at the moment. So if the gap is closed, then I would think it's possible for it to turn direct down. But that gap is like a magnet, you know. Gaps are like a black hole in space. They tend to suck the price action back into the gap. My little description of what happens. Nobody knows why market gaps are almost always closed. But they are, and that's all a technician needs to know. Anybody needs to know. And it just usually happens. So pay attention to gaps. And we're looking at NVIDIA. Another new historic high. Wow, this is a great stock, but it's overbought. So watch out, people. Don't go buying it when it's overbought. You're asking for trouble. Plus, it gapped up today. This could turn out to be an exhaustion gap. I need to see it start to drop off. I'm looking for sell signals. Whenever I see yellow on a rally, I know it's overbought. That's a custom RSI signal on the bottom. I learned RSI from Wells Wilder himself, stochastics from George Lane, Bollinger Bands from John Bollinger, William percent R from Bill Williams, Larry Williams, I meant, not Bill, and so on. In the same international lecture circuit throughout the late 70s, 80s, and early 90s. Next, overbought conditions stopped the rally. Today's rally didn't make any higher highs. It's still up a little bit. This is E-mini. We're getting a little bit more strength at the moment. Remember, I'm looking for it to turn down at any time. You guys have a great day and profitable trading to you.